this kind of a scenario, which are the stocks that you're betting big on for 2024 then?
Sure. So I think I'm sure Shelter is going to note that in his little brown book. And something from the PSU banking pack is something that I like. Our take is that A, valuations are very, very attractive, and B, the expectations in terms of steady growth at a steady state over the next few quarters should probably continue. So within this pack, Bank of India, Sakshi is something that we like at this juncture. What you've probably seen in the past few quarters as a testimony to most PSU banks within its peer set as well, the asset quality pressures have come off very, very steadily. GNPA is at 5.54, net NPA is at around 1.54, and that is expected to go down even further. The NIMs are maintained around 3.05. The expectation is they might just hover around this range over the next few quarters because obviously you've got a scenario where you've seen deposit rates go up and advances rate have not gone up in that same proportion. But as the rate cut scenario unfolds at some point in this calendar year, the incremental benefit also comes back very, very sharply. The other element also is that tier one ratio is about 12.5%. You've got provisioning, which is at 90 odd percent. I was hearing the con call and recoveries and upgrades is something that the management feels very, very optimistic about going forward as well. A percentage of their deposit base is largely retail, Sakshi, and therefore, if you look at their cost of funds, it's somewhere around 4.35 odd percent on an overall composition, and that lends a very, very healthy support along with credit deposit ratios at 77 odd percent. And therefore, with the SME2 book, which is very, very marginal as we speak, it has come up quite significantly. Our take is that at 1.12%, if it goes below 1%, they're in a very, very strong position to report steady state earnings growth. So Bank of India is something that we continue to like. At Markets with India, the EPS RS ratings looks extremely strong as per our ratings and rankings. The other one is something that I'll continue from last week. Sir just referred to me as the Bhujia man. But I think I'll go rather with Parag Milk Foods. Our take is that this industry is going through a significant and a structural shift. Very few listed players, to name a few, their peers like Heritage Foods, Dodla Dairy, have a large part of their portfolio coming in from liquid milk, which is again sensitive in terms to how milk prices probably move. Parag Milk has a major proportion of value-added products, more from ghee, cheese, and the mix of paneer as well, where the manufacturing capacities account for almost 64% of the top line. The only issue that probably lies is that the retail reach is not as great, and therefore the B2B business is there with restricted margins. But as the B2C business grows, and the management is very hopeful to take its retail outlets from 4 lakh units to almost 15 lakh units over the next 15 months, that can have a tectonic shift in terms of the margin profile. They reported 7.2 odd percent. The expectation is that with a change in the strategy that they're probably deploying and expected to deploy, and the addition that they've probably got in terms of VAP products already on their books, 20% market leadership in ghee, 30% in cheese, that can very well, that augurs very well in terms of margin expansion, which can be far better in the next few quarters. Consumption as a theme selectively should do well. Packaged foods as a category where Parag probably also falls in, is expected to do well over the next few years. So I think I'll continue with last week's call with Parag. The targets are anywhere between 20-25% from a medium-term perspective. And we obviously keep a safety margin than 8% stop loss on all our investments that we probably suggest. Clear disclaimer from my side, not anywhere in my personal portfolios, but I've suggested this to clients, to our reports. Clients may have holdings in this.